This
So
conference will now be recorded.
you wanted for GUI dump, right?
Yes, it is.
Yeah. I'll send you immediately after the class. I'll send it to you. I'll also send you the login details. I'll create your username and password,
Okay,
and after you install, you can connect it.
okay, sir. Okay.
Yeah. Okay. Shall we start? Ready?
Yes, sir.
Okay. Okay. So we almost completed the introduction part, except one small area of introduction about the master data, what to use in FICA. Basically, FICA being the subledger accounting system, the main and most important master data will be the contract account. The heart of FICA is basically contract account. So basically, contract account will provide the accounting perspective. It will help us to provide the accounting perspective for a BP, for a business partner. Because when you create a business partner, it is not having any information about the accounting. Unlike when you create a customer record, you maintain a full customer master record with XT01 transaction. So there you maintain the company code data as well. And using that information, the customer number will act as a account by itself, subledger account, and you can use it for the posting purpose. But in case of ISU, when you create a business partner, it does not contain any information about the accounting. Also, when you create a BP, we are not maintaining it for any particular company code. That means there's no information about in which company code the BP will be posted transaction. So because of that, what we do, after we create a business partner using the cross application component, which is called business partner. Actually, here we create a business partner using a role MKK, that is contract partner. In case of ISU, the business partner is going to have a contract with the utility company, like a contract for electricity connection or gas connection or water connection. So that's the reason we call it as contract partner. So as you know, whenever you create a business partner, a role will come into picture. The role is basically application specific. If you maintain the business partner with a particular, role category and the role, then only that BP can be used in the certain applications. Now, since we want to use BP here in ISU, in utilities, we have to maintain business partner with the role MKK. Only if you maintain the business partner with the role MKK, we can create a contract account. And based on the contract account, we can create the contract in ISU. Although contract is not common for FICA in every industry solution. For example, in insurance or telecom, there may or may not be necessary to have a contract, which I'm not sure. But in the case of ISU, the contract is a must, which only we do the actual billing and invoicing. The basis for billing is contract. So actually, there are three records here, how they are connected. BP, that is a business partner we create. After that, we create for the BP a contract account. And using the contract account, system will create the contract in the background. Okay. Now, the contract is not something what we create upfront. It's something that is created when you do move-in process. Okay. But in future, the most of the assignments of the company code division will happen to main transaction, sub transaction, account determination. Okay. But in the other SAP systems like insurance, telecom, there may not be concept of a division. So we can use company code as the primary key and then the account determination type, that is main transaction, sub transaction. So when we are configuring, we'll configure for both. Okay, considering ISU as an industry specific solution where we are going to prepare the invoice and then post. Otherwise, we are directly posting a FICA document like a sundry receivable or other receivable where we don't bring the division into picture or the contract into the picture. That means contract is not necessary if you are going to post to FICA. But from ISU perspective, contract is a must. Okay. But FICA itself is not specific to only ISU. It is something what you can use across n number of industry specific solutions. So we will do both with the contract, without contract, so that we are covering the whole idea of FICA being done for ISU, otherwise for some other solutions or independently how FICA is working. Okay. So from our perspective, we can say BP and contract account are the most important master data. Contract becomes important considering the ISU, where the particular industry sector solution is ISU. Okay. But this contract is basically division specific. Okay. So while creating enterprise structure, at least you have to create one division like electricity or water or gas, and that will be used in creating the contract. So BP and contract account will focus. That is where our main master record is involved. The data is involved. Okay. Now there is a kind of a flexibility here. For one BP, we have to create necessarily at least one minimum. Okay, one minimum contract account. Because unless contract account is created, FICA invoice or posting cannot happen. So minimum one contract account we can maintain. But it is always possible for a BP, we can have multiple contract accounts. We can have multiple contract accounts depending on the situation. I will explain the scenario in which multiple contract accounts may be necessary. BP is one, and you can have multiple contract accounts. Like for example, I'm opening an account in a bank. My business partner details may be same, but I may be having multiple contract accounts. One for savings account, one for the current account, one could be for the combined account, okay, like a joint account, like that. Okay. So here you can have multiple contract accounts, each account used for the specific process of invoice posting. And again, there are two types of contract account category you can create. We will see that while doing the configuration. Basically, at the system level, it will recognize two types of contract account. One is a standard ISU, or one is a standard contract account, and there is the correct to bill account. So these are the two categories what you can use in ISU, in general in FICA. So we will see how to configure them or when to use the two different types of contract account categories. So BP and the contract account. This is how the relationship will be there. And considering the ISU, one contract account can have one contract, or you can also have multiple contracts. Using the same contract account I can use for preparing the contract for electricity, water, and gas. So one BP, multiple contract accounts, and each contract account can have multiple contracts. So this is how the master data is related in the business side. Okay. But in ISU, they'll be maintaining some additional master data also, which may be required in technical master data, device management. Okay. That part we don't have to get into because that is purely an ISU area. Okay. We will take out only that is whatever is the minimum information required from ISU so that we are able to create an invoice. Okay. I mean, you don't have to configure the device management here for our FICA perspective. Without device management also, we can do the billing and invoicing. Okay. So I'll show both with the ISU invoice being posted or directly FICA is posted as a sundry receivable. And we'll also do one scenario where the sales and distribution invoice is also posted into FICA. Okay. So all the three areas we'll be able to see with the ISU, without ISU, and with EST, how we can create invoices and post it into FICA. And then FICA journey will start the document lifecycle. Okay. Now, basically, there is a concept of FICA document lifecycle. Okay. What is this FICA document life cycle? Let me just explain. Now, let me see whether I have got it.
Sir, one doubt. Sir, actually
Yeah.
here is this telecom solutions. So
Ah,
we have for the first of all a BP is created that flows from
okay.
CRM to CI and that FICA,
Okay.
and we have a concept here for multiple contracts. For
Okay.
GPRC is there, and then we have specific telco contracts in down of that. So
Okay.
this is a standard functionality of FICA, or this is for example, one business partner, one provider contract, and
Ah,
in that provider contract, we have another two sub contracts are there. So
Acha, now let me ask you. First, you create a business partner.
yes,
Then
yes, sir.
then you're creating a contract account, right?
Yes, sir, yes, sir, yes, sir.
And then after that, you're creating a contract.
No, sir. It is created directly only. Actually, copy control is used here
Ah,
in CRM. So
ah,
at the time when order is created, na, at that
ah,
time,
ah.
first of all, BP is
Yeah, yeah,
created,
yeah.
and then a business agreement is created. Then
Okay.
that
So
flows from CRM to that downstream.
yeah. So
So,
what you mean to say is it is something
uh,
similar to ISU. You
okay.
have BP, you have BP, you got a contract account and the contract. You are also having
Uh,
contract in telecom, right?
yes, sir. Yes, yes.
Okay, okay, okay. Fine, fine, fine. No, no issue, no issue. Here, yeah. So there you are calling it as telecom contract. Here you're calling it as ISU contract.
Okay, sir. Okay,
Okay,
sir.
that's the contract is you can say industry specific again here. Here any contract is created, it is for utility contract. That means business partner is basically consuming electricity. So for that one contract, the BP is consuming water. For that there's one contract, and also consuming gas. So there is one contract account, one
Okay, sir.
contract.
I
That,
got it. Actually, for one BP, there can be multiple contract
yes,
attached to
yes,
that.
yes, yes, yes. But in general, the uh, arrangement here is one BP can have multiple contract accounts. That means after creating BP, I can have multiple contract accounts, and for each contract account, you can have multiple contracts. Okay, that is how you can understand the relation.
Okay.
You
Yeah.
okay? That yeah. So now FICA lifecycle document. There's one SAP picture is there. I will just see where it is. FICA. Hmm. Okay, let me see my Gmail. In that I'll get. So this document I'll send it to you. You may also have it, but will also use it very frequently. This is a good document by SAP. Actually, they are created for the certification, but
Yes, sir.
it is used for. You have this
Uh,
document?
yeah, I had, sir.
Yeah,
Recently I got from the
yeah.
person who gave
Okay,
the contract.
fine,
Yes.
fine. So basically, the life cycle of the open item. Okay. So basically, this is how the life cycle of an open item. Basically, what is open item? Whenever you prepare an invoice, the amount of the invoice is immediately posted to contract account, and thereby the receivable is created, open item is created for the contract account. So we prepare the invoice and then it is posting the amount to the contract account and it becomes an open item. So open item can be current date may not be due. It will become due on certain date. Let's say if I prepare a invoice and post today, the payment term is 15 days from the date of posting of the invoice. So today it is posted, but it is not due, but it is posted, it is due after 15 days. The open item will come due after 15 days. And then subsequently item is cleared. Okay. That means the business partner has made the payment and we have cleared the open item. And all this data will go and sit in general ledger accounting. When you prepare the invoice and post to FICA, that data is transferred to general ledger accounting. Similarly, when the payment will come from the business partner, we enter the incoming payment, clear the open item. Again, it is posting into FICA, a document, and then we transfer that data as well to financial accounting. Okay. So here it is saying basically open items can be posted in invoicing, dunning, or return processing. Okay. Alternately, open items can be posted manually in subledger accounting. So here, this is what I was telling. The invoice is the origin for the FICA document, and that FICA document will create the open items in FICA. So open items can be posted while we are preparing the invoices or dunning. When you prepare the dunning, the open items can be posted as the charges or return processing. Not only this, there are so many reasons why open items can be created. Like for example, we prepared a open item and then you reversed. Again, you created a open item with the correct information. A new open item is created. So here he is giving some example. It can be created during invoicing or dunning or return processing. Because basically business partner issued a check, but they had got returned from the bank. Okay. So previously we had cleared the open item because the payment was entered against the check. But since we found the amount has been returned back by the bank, we will do the return processing, and in that case it will again add the new open item. Okay. Alternatively open items can be posted immediately or manually in a subledger accounting. There are various reasons why open items can be created, like sundry receivable or other receivables. Okay. We directly post into FICA subledger accounting by using FP01. Okay, based on that, the open items can be created. Items relevant for the general ledger are regularly compressed and transferred to general ledger. Okay, so this is what we saw yesterday in the FICA document. We have aggregated data at the BP level and aggregated data at the general ledger account level. This is basically like a compressed data. So even though it contains a lot of information, the data is very compact in the FICA document. It occupies less space because we are using the concept of the aggregation. This data is subsequently transferred to general ledger. That means when you post to FICA, it is first going and sitting in FICA, all the data. Then we transfer manually data from FICA to financial accounting. Clear documents that have expired can be archived. Okay, that means we have created, let us say, 100 FICA documents, 95 have been cleared. Okay, now whatever documents have been cleared, we can archive them so that they won't show up in the space, but they will be there in the database inactive. Okay, so that you can concentrate only on the items which are relevant to us. Otherwise, very old open documents which have been cleared can be archived. Open and cleared items can be displayed on the account display. At any point of time, when you go to FPL9, we can display both. We can display only open items which are due for processing, or both the items, open items and cleared items. Both can be displayed. And again, in open item, there can be two types of open item. Open item can be debit entry. Open item can be credit entry. Debit items are created when you post to invoice or any receivable. Okay. Credit items will come whenever you make a credit memo or whenever you receive some payment on account, okay, or if you have done the reversal of a open item, all these will become the what you call open items on the credit. Okay, so this is how the posting will happen. Now moving forward, life cycle of the open item. So invoicing is created, and then open item is created. Open item is not due on the date, but it will become due. Okay. Now payment we are going to enter. Basically, you are clearing the open item by entering incoming payment. Basically, you need a payment to clear the open item. But broadly speaking, there are two types of payments what can be done in the ISU or in FICA. Okay. One is basically called incoming payment entry. One is basically incoming payment entry. One is the incoming payment entry. This we also call it as basically customer's initiative. Customer takes the action. Suppose I prepared an invoice, I send it to business partner. Then the invoice is become due, and then the customer is aware they have to make the payment. Now they have several ways by which they can clear the open item or basically make the payment to the company. One is they can go to nearest cash desk, a kind of a cash counter which is available from the utility company. Personally go to that place and then say this is my invoice and this is the amount. Then make the payment as a cash. So instantaneously online the payment can be entered and the open items is cleared. Okay. Or at the cash desk counter, the person can give a credit card and then say clear this amount by using my card. A card entry can happen, payment entry. Or if utility company is permitting, they can deposit a check as well. But there could be some regulations like if the amount is less than 10,000, you cannot pay by check. You have to give either by cash or credit card. If it is more than 10,000, then you can deposit the check. So payment can be entered physically at the cash desk, either by cash or credit card, or you can deposit the check. This is one option. Or the company could be giving you a kind of a handheld device application, like mobile, application, where you download and install. There you can access all the information. What are the amounts you have to pay? What are the open items? And then account information will be there. How much is the balance? And then every account will have username and password. They will log in and they can enter the payment from there. Again, they can clear the payment by using a credit card, or they can go for bank transfer, net banking. They can transfer the amount. That means here customer is taking the initiative to make the payment. Or utility company has got a website wherein you log in and then see what is the receivable, and then from there you can clear the payment by either credit card or the bank transfer. Okay. In all these cases, the customer is taking initiative to make the payment. The another incoming payment is basically called payment processing. Okay, it's called payment creation. In the payment creations, what happened? We create the debit information. We have posted to several contact accounts. The invoices have been prepared. Then we will prepare in the payment creation bank transfers, which are basically called either direct debit or bank transfers. Now, this is very popular, method used in many companies. Like most of the utility company, what they will say, you can link your utility account with the bank. That means suppose I'm having account in, let's say, ICICI, then utility company will say you can register in ICICI bank with utility service connection, and there I can say this is my service number with the electricity department, and ICICI will internally send the communication to ICICI utility company, and which will confirm my account number is okay. So in future, what happens? Utility company can directly send the invoice to bank. It is called direct debit. That means they are sending actually the information directly to bank, and it is actually causing a debit entry to the account holder's account. That means suppose every month invoice will come, the bank can directly make the payment to utility company by debiting my account. It's called direct debit. Okay. That means I don't have to come into the picture. I've given a standing instruction to the bank. Whenever the invoice will come from the utility company, it should be cleared immediately. That's called direct debit. But for direct debit, they have to implement the financial supply chain management. That is SAP, Finance Supply Chain Management. Or you can simply do bank transfer. Bank transfer means we first create a file. Suppose out of 10,000 contract accounts we have got, 3,000 are with the HDFC. Okay. So for all the HDFC contract accounts, we prepare one bank transfer file. A media will be sent to the bank. The bank will check and then confirm the payments can be released, because I will be logging into bank account and then give the clearance. It's not direct debit. I have to log into the bank and then say invoice has come, this amount can be cleared. Okay. So whatever amounts have been cleared by the contract accounts, the bank will send a media back to the SAP company, utility company. And once the payment information will come, we create a lot payment entry and then clear it. Okay. So here we don't say customer is taking initiative. We are taking initiative. We are saying this is the invoices to be paid by various customers, and we request the bank to make the payment on behalf of the customer. That is called request. It is called payment request for the bank transfer on direct debit. Okay, that is what it is showing here. Either it can be from the payment cash or the direct debit. Okay, payments are initiated either by the business partner, the cash payer, or via payment run like direct debit or bank transfer. Okay, payment
Your voice is not audible. Hello.
you might have paid by check. Okay, yeah, you're asking something.
Actually, your voice got disconnected, sir. No, it's
Okay,
nice.
okay, okay. Now you're able to hear.
Yeah, yeah.
Yeah. So basically, sometimes what happens, the business partner may not pay in cash, they may pay by check. Okay. So in that case, what happens? The check, while check was entered in the check lot, the amount was cleared, but subsequently we got information that the check has been dishonored, it has been returned. Okay. In return processing, cleared payments are reset. Okay. Initially, you had open item, we cleared them by the incoming payment via check. Okay. But subsequently, we came to know the payments have been dishonored, the check has been returned. Okay. Then we start doing the return processing. In that case, what will happen? Whatever cleared payments are done, they are reset. That means that clearing is removed and the open items are again put back into account. The source receivables are posted as debit items and return charges are posted. That means whatever initial receivable was there, which was actually cleared, it will be again put back as open item. But because the check has been dishonored or returned, there will be some service charges. Okay. That means bank will make some charges saying that for the every check that is returned, this is the amount actually company has to pay. We have to pay, but we have to collect that amount basically from the business partner. In additionally, we may also charge some amount ourselves. Okay, so there can be two charges: bank charges and our charges. Both are actually debited to contract account. That means suppose 10,000 rupees is the amount what was initially cleared by the check, but check got dishonored. So as per the rules, for every 1,000 rupees, 50 rupees is the return charges by the bank. Okay, so for 10,000 it will be 50 into 10, 500 rupees, and utility company is charging 100 rupees. So 600 rupees will be debited as extra amount to the contract account over and above 10,000, which was the original open item. So the source receivables are posted as debit items and return charges are posted. Return charges can be bank charges that are passed on to the business partner or the company charges. In some cases, it will be either of them or both. Usually, one of them only will be passed. That means bank will actually charge utility company because check got dishonored, returned. That amount we are now posting it to contract account as a charge. Or we are charging the customer and then paying it to the bank. So we can have interpretation that way, the returns processing. So returns is one of the subsequent life cycle activity. Payment entry by cash or direct debit is one in life cycle activity after the open item has been debited. Then it can be returns as the future one of the activity. Okay. Now payment by cash or direct debit entry. Now whenever the open item is created, it will have a due date. Suppose I posted today, payment is due after 15 days. Okay. But if the item has not been paid by the due date, okay, then what would happen? The dunning will start happening. Dunning will be doing frequently, but after the due date, we may give some grace period. Let's say 15th of November is the due date. Let's say the basic, 3 days we are giving extra after 15th. So when the system will check when the dunning is happening, if by 18th the amount has not been received, then the open item becomes dunning item. Okay, that means it is something for which we have to create a dunning notice. Okay, every time you do the dunning run, which is basically a parallel processing, based on parallel processing several contract accounts, we will do the dunning at any given point of time. Some accounts may not have open item. Some items may be due but already paid. Some items are due but not paid. So for those items which are not been paid, the dunning notice will be prepared. Basically, dunning will happen, and dunning is required for those items. A particular level will be reaching when the dunning happens. For each dunning level, we will have a dunning activity. For the very first time when the dunning happened, open item was found not paid, then the dunning activity send a soft letter saying that, we find your amount is due, overdue. We haven't received the payment, so please pay the amount immediately next 3 days or 4 days. If you already made the payment, ignore it. Like that, you can send a notice. But again, after 10 days frequency, again, when the dunning is happening, we found the item still not paid. Now level 2 has reached. Now it can be like a very harsh wording, okay, kind of a legal, notice we are sending. Please find, information that your account is showing overdue items, and we have already sent you one letter. You have not paid the amount. So this is the last letter. You have to make the payment immediately. Otherwise, if you don't make the payment after 3 days, your connection may be disconnected. Okay, something like that. Again, when you do next time dunning, we found the customer has not responded. Directly it will go for disconnection of the meter. Meter will be disconnected. So like that, the dunning is one of the important activity. Returns is one open item processing life cycle. Dunning is the activity what happens during the open item life cycle. And whenever dunning happens, sometimes what happens, dunning charges are debited to contract account. That means you're not made the payment, and we have done some dunning activity, processing of payments, processing of letters and things like that, maybe disconnection. So there will be some charges. Those charges are again posted as open item to contract account. Overdue items for each cash payers or blocked items from the direct debit players can be done. Okay. Now, what is this blocked items from direct debit? Now, sometimes what happens in the direct debit, you send the invoice to contract account, and the contract account holder in the bank does not have the balance. Okay. So the bank could not debit. Okay. So then in future, you don't do the direct debit, because the first time when you did, the funds were not available. It was returned back. So now the account is blocked for the direct debit. They have to make in future the cash payment, or sometimes because the company will ask them to deposit a security deposit. But now these items which were not paid because they were blocked in the bank because of the payment was not available, they can be dunned. Dunning is an exercise where we want to find out how many receivables are open and due, overdue. And for them, we have to intimate the customers. A kind of a correspondence will be sent to the customer. And for each dunning level, a dunning activity will happen, like sending a letter or sending a legal notice, or causing the meter to be disconnected, or asking for the business partner security deposit. These are all the end effects of the dunning activities, what we are performing. Dunning charges or interest on arrears also can be posted. Sometimes for the open items, we may say you have not paid the amount on time, dunning has happened. For every dunning level, you have to pay 2% charges. That charge will be, on the open item debited to the contract account. Now, interest calculation. Okay. Now, open item is not due, it is due. But when it is overdue, then what will happen? Sometimes you may say, if your payments have not been received within 30 days, the interest will be charged. That means we find out how many items are open which have not been paid after before the due date. For all that, we will charge, let's say, 10% annual interest. Okay, on pro rata basis, it will calculate and then debit the customer, and these amounts are charged to customer. Interest calculation can be carried out automatically in invoicing and in dunning run, or it can be triggered manually. An interest document is posted. Okay, that means whenever you prepare the invoice for the future, it can consider also in the past how many open items are overdue. For them, interest amount is calculated, and it can be posted directly in FICA, or it can be processed through invoicing in ISU invoicing, and then the amounts are again posted as charges debit entry to contract account. New open items are created. Interest can be calculated for the cleared items as well as for the credit or the debit items. Okay. Interest can be calculated for the cleared items. That means you clear the item, but after overdue period. So for that also, you will say you have to pay the amount for the overdue item. And if there are some credit items lying with us, even they will get the interest, but that interest we are paying to customer. Say for example, customer has made by mistake a extra amount payment that is lying with us. We are not adjusted with any open item. So for that also we can make the interest back to the customer. In one case we are collecting interest from the customer. In another case we are paying the interest amount to customer. Classic example is security deposit. You got a security deposit which is available with just the down payment. It's an open credit actually. Whenever security deposit is there, it is locked for clearing. We cannot use it for clearing any open items, but that amount will stay with us. So over a period of time, we can make the interest charges to the security deposit, post it to the contract account, but it will be posted as credit. That means here we are actually paying the interest to the customer. In one case, we are collecting interest. In another case, we are paying to the customer. So interest can be itself posted as a debit entry or a credit entry. Okay. Then deferral and installment plan. Open items can be deferred manually. A deferral can take place automatically in the return processing. Okay. Deferral means basically putting a new date for the payment. Say for example, a invoice was paid by the customer and it was cleared. Then subsequently the return has happened. Now it is causing a new open item. This open item will be given 3 days as a future date for the payment, okay, or 5 days. That means we are fixing a new date for the payment entry for the open item which has been returned, so that the invoice will become again due after 5 days. Okay, that's called deferral. Deferral can take place automatically in the return processing. The original due date is retained in the case of a deferral. If the deferral date is reached and the item is still open, the original due date is used again as the further business process. That means due date is always there in the history, but for the payment clearing, we are giving some extra period. That's the deferred date. If the payments are not paid by the deferred date, again, the original due date itself will be considered for the subsequent processes like, interest calculation or any other activities. Okay. So the original due date will remain, but the deferred date is for the customer to make the payment. Okay. Then you can define installment plan. Now, say for example, another important activity what will happen in the life cycle is, let us say there is a commercial customer or industrial customer. In one of the month, we have an invoice of around 7 lakhs. Okay, they have consumed very heavily because of the heavy production activity. The invoice was for about 7 lakhs. Okay, but suddenly the factory has gone into some financial crunch or something. Okay, they are not paying the amount, but they are saying because of considering our financial condition, we request you to break down this 7 lakh into the installment plan. Okay, that means Actually, 7 lakh as a whole is payable, receivable immediately from the contract account, but they will request that this amount should be broken down into installment. So this 7 lakhs will be broken down into number of, installment. Installments can be 3, 6, 9, 12, or any number of installments, 5 installments. Okay. That means 7 lakhs by 5 or 7 lakhs by 6 or 7 lakhs by 12. So 12 installment amounts are created and posted as open item. But while posting the installment, we can also charge some additional charges. Over and above 7 lakhs, you have to pay 7 lakh 10,000 totally. That 10,000 is the charge amount you are charging because you are paying in installment. So the installment amount could include the original amount plus the charge amount, pro rata adjusted for each month. Okay. So installment is again a open item processing in the future where we break down the complete amount into several installments. Okay. So you can define an installment plan for the open items. Interest calculation can be triggered by installment plan. You can also calculate the interest calculation for the interest, installment plan amount and charge to customer. Interest receivable is integrated into installment plan. That means that interest or charges what you are calculating that is clubbed with the interest amount in the installment plan amount and broken down into monthly wise. That means 7 lakh is the item, but interest you are calculating 10,000. This 10,000 will be added to 7 lakh and then divided by 12. Monthly you have to pay that much of amount. Okay. So interest receivables are integrated into installment plan. Overdue items can be entered as doubtful, adjusted individually. Now write-off. Okay, write-off is one more scenario where you see sometimes what happens when you debit as open items, they are doubtful. Doubtful in the sense business partner may or may not pay. Sometimes they may not pay. Okay, like some interest charges we have posted, they would not like to pay. Okay, and some arguments are there, some negotiations are there, some letters are there saying that they cannot pay because of this reason, or it can be subject to a kind of a discussion or ratification. Okay, but if these items are just lying as open items for a long time, it is not going to be good because open items will cause the interest. That means suppose in our business we have got total receivable as 50 lakhs. Okay, the financial accounting will deduct some interest charges on the open items. So our profitability will go down. Okay. But if you know that open items are doubtful, then why carry them forward? You can write them off. Okay. If the amounts are very less or something or doubtful debits. Okay. We have no choice. We have to make a proper case and then write it off. Okay. With the proper adjustment plan, if you give the reason, tomorrow auditors also can approve it. Okay. So basically overdue items can be entered as doubtful, adjusted individually or written off. Okay. You can write off those open items. Okay. Items can be submitted to external collection agency. Okay. This is also an important activity. There are some doubtful amounts we are writing currently off in our system, but we still know that they can be collected if we pursue with the customer. So what we do, we although write it off in our system, we transfer those doubtful amounts to a collection agency. Then collection agency will start following with the customer so that they will put pressure on the customer and then make regular visits to customer. I mean, it is something like by force. We have to pressurize them and collect the payment. So these amounts can be collected by the collection agency and you pay them some commission and the amount can be taken back into our accounting system. Okay. Items can be submitted to external collection agencies. Okay. So like this, various open item processing will happen. Open item cleared by the payment. It can be direct cash payment or debit items. That is basically the bank debits or bank transfer. Then return processing and then, return processing charges, interest calculations, dunning charges, and then deferrals, installment plans, write-off. These are all the subsequent, activities what can happen during the life cycle of the particular open item. So that means open item itself is available in the form of a document. So that document has got a lifespan. Okay. Finally, it has to be cleared or written off. That's the only option. Okay. But that's the only way open item can be removed from our entry in the account. Okay, but during that period, so many activities can happen. That is what we have just explained. Okay. Now, why contract accounts receivable we are using? I have told yesterday. First of all, this is the important reason: business partner concept. Okay. In traditional SAP system, when you're using customer master records, customer number will become a account by itself. That means each customer number is an account by itself, and in the customer master, we are maintaining company code data. And based on that, we are maintaining complete information in the customer master itself for preparing the invoices and posting into customer account as a debit entry for the open items. Okay. But in all other solutions like ISU, telecom, utilities, we don't use the concept of customer. We create a BP, and BP does not have any accounting perspective. That's the reason we are creating a separate master record for the contract account. So business partner concept is used. Optimized use of storage space due to special type of document structure. FICA document is structured in such a way it can hold large amount of data, but in a compressed manner. So even though it has a lot of data, it is all in aggregated data. So it can hold very small amount of space in the system. So the data in the database will be smaller compared to general accounting system if we are used. Parallel mass runs. Okay. The FICA supports all the parallel mass processing. That means you can prepare the dunning for lakhs of contract accounts at a time. You can do the interest calculation for lakhs of contract accounts at a time. You can do the write-off scenario for lakh of customers. Okay, so instead of doing for each and every individual contract account holder, we can subject all of this into parallel processing. For example, automatic clearing. For every contract account, some open debit items are there, some open credit items are there. Instead of doing the account maintenance manually for each and every contract account, we can go for the automatic clearing in a mass. Okay. The advantage in the mass processing is you can do parallelization. Parallelization means you are actually splitting the load into more than one application server. Suppose we have to process, bank transfer for about 10 lakh contract accounts. If you process everything in one application server, it will take a long time. Okay. Then we can break it into two application server. First 5 lakh contract accounts will be processed in one application server. Remaining 5 lakhs will be processed in another application server. So that, in the same time, you would have done the activity. Otherwise, it would have taken the double the time had you done individually. Okay. So parallel processing. The documents are assigned to business partner and the contract accounts. Okay. And the contracts depending on the industry. Okay. Basically, when you create a FICA document, it gets directly connected with the business partner and also the contract account. Say, for example, for the business partner, we have got two contract accounts. And for each of the contract account, there are open items. Okay. Suppose I have a BP as 178 and they've got two contract accounts, 3001. This is one contract account. And then it has got 3002 as another contract account. For this, there are three open items. There are three open documents. One document is 143, 154, and then 160. These are the three FICA documents. And here it is 345 as one document, 432 as one document, and then 567. So each of this document has been connected to the contract account and also the business partner. So if I go to individual account balance display, then it will show these three open items. Okay. But if I go to open item display for the business partner itself, all these 6 items will be displayed as a contract, open items. Tomorrow, suppose if you are entering the incoming payment, I can do the payment entry directly for a contract account, or I can also use the BP as the entry for making the incoming payment. Okay. That means totally put together, amount is coming to, let's say 50,000 rupees, or let's say 2 lakh is the open item due amounts. All open items put together 2 lakh. Now business partner is now making a payment of 1,50,000. That means we enter the payment on behalf of the business partner as 1,50,000. Then using the clearing strategy, what it will do, It will take out all the open items, arrange them in the way clearing strategy has been given, and the clearing will happen. Okay. This is happening because the open item is not just connected to only contract account, but indirectly it is also connected to BP as well. Okay. That's the advantage in the case of FICA, where you can have the contract account related to both BP as well as the contract account. Summarization of general ledger information, summary records. Okay. This is the biggest advantage in the case of FICA. Okay. In case of ESD, what happens, or in the conventional method of invoicing in ESD, I have got 5 customers today prepared invoice. Invoice number 1, it is posted directly into financial accounting. And in invoice, there are 5 GL accounts. All these 5 GL accounts are posted in the process of processing the invoice. Invoice number 2, again, amount directly posted to FI. And then here maybe 6 GL accounts are updated. Okay. That means every invoice will have a corresponding direct entry into financial accounting, and the direct posting is happening into GL accounts. But imagine tomorrow we had done the process through FICA. Okay. Invoice 1 we are prepared, and invoice 1 is not directly posting it to FICA, it is posting to FICA actually. FICA 1 document is prepared, and invoice 2 when you prepare, it is posting into FICA. A FICA document 2 has been posted. Now, here the information will be available for the 5 GL accounts. Here it will be 6 GL accounts. Now, what the system will do, we will close the FICA document and then you summarize. Okay. That means out of 6 GL accounts, 5 GL accounts are common here. Here also 5 are there, same GL accounts used here also. Okay. Then for both the GL account, for both invoices, it will add up the amount. Okay. Let's say one of the GL account here is 8,520,000. Its value is 2,000 rupees. Okay. In this particular case also, there is a GL account 8,520,000 and then the amount is 3,000 rupees. In general SCP, what would have happened? This amount is posted to 8,520,000. Again, 3,000 is posted to 8,520,000. But here what system will do, it will summarize. Okay. It will say 8,520,000 is the total amount is going to be 5,000. That means instead of posting twice, posting to general ledger accounting, we are posting only once. Okay. This is for one invoice. Imagine we have done today 50,000 invoices. Okay. In all 50,000 invoices, 8,520,000 is there, energy account. Okay. If you use the traditional method of accounting, what would have happened? 50,000 times you would have been posting to again and again to 8,520,000. But in FICA, not required. We are summarizing. So for 8,520,000, whatever 50,000 values are there, it will take and then summarize. One single amount, consolidated amount will be posted to 8,520,000. Thereby, you are drastically cutting down the amount of volume of data what you are posting into financial accounting. That's the basic advantage here, summarization. Agent-friendly processing of the accounting transactions. This is what we were referring. Like we are using CRM, and then you are basically entering the incoming payment or preparing the invoice. Okay. Then it will go to CI and then post to FICA. Okay. In ISU also, there can be a customer interaction center where the contract holder can say, my invoice has to be paid, or I want to see what are the open items. Okay. So the CIC system can talk to FICA database and get the data and then inform to the customer. Okay. So basically it is a enhanced functionality. That means FICA will come with some kind of enhanced functionality wherein they give some kind of FQ events. Okay, FQ events. This is basically ABAP area. Okay, these are something like user exit. So what SAP has given, it has left some pockets for future enhancement by the business for each area: contract account, open item, dunning. Okay. Now standard functionality, what SAP has given, it is available. But if you want to enhance it, then the ABAPer can add the customized code into the event. Okay, that means you are not altering the original program. There is a pocket in the main program where it will allow you to add some functionality, what you want, and based on that, the process will be adjusted. Okay, so that's what is called enhanced functionality. With the help of ABAPer, you can use the FQ events basis for the industry and the customer specific functions. Okay, So basically, it is something designed considering the industry requirement. For example, like it could be ISU or telecom. Okay. So we are using for utilities, insurance, telecom, media, public service. Okay. So for all these, FICA is going to be used. Okay. And the main master data what we require is business partner and the contract account and the contract. It division specific. Basically, the main objects in ISU, main objects in FICA will be BP, the business partner for whom we are creating the open items. But open items are created because of the contract account and the business process. Okay. Now, if it is ISU, then contract also will come into picture, division specific. Like in your telecom also, you are saying it is a kind of a contract what we have. And then for the contract, the invoices will be prepared and posting will happen to FICA. And open item will be containing the items, basically document. Now this is a relationship. One BP can have multiple contract accounts. Here you can see the picture. And for one account, you can have the multiple contracts. Okay. So this is how it is. So now this is the thing what will be starting when you start doing the configuration actually. Okay. So now we have completed the basic introduction